Welcome to this explainer. If you've been following the telecom space at all, you already know AT&T has been on an absolutely wild ride over the last decade. But as we look at their fundamental realities in 2026, we're actually seeing a remarkably focused company. Today, we're diving straight into the data, the balance sheets, and the strategic roadmaps to unpack exactly what this post-media era means for the telecom giant and its investors.
Here's our roadmap for today. We'll be covering 1. The history of AT&T, 2. Their financial health and capital, 3. Building the network, 4. The dividend story, 5. Global and U.S. competitors, and 6. Our final verdict on AT&T. Let's get right into it.
Section 1. The history of AT&T. We're looking at the journey from Ma Bell to modern fiber.
To really understand AT&T's current strategy, you have to look at how they built a natural monopoly, ventured into a highly distracting media era, and finally spun all of that off to refocus purely on 5G and fiber in 2026. What's kind of wild here is that the AT&T we know today can actually be legally traced back to Southwestern Bell Corporation, or SBC. They were just one of the baby bells created after the government broke up the original Ma Bell way back in 1984. SBC aggressively acquired other regional providers, and then, in 2005, the child actually acquired the parent. They bought the AT&T Corporation and took on its iconic name. Through the 2010s, they tried to become this massive media conglomerate, literally spending billions on DirecTV and Time Warner. But realizing the lack of synergies, actually, scratch that, it was a massive drag, they strategically reversed course. That culminated in the 2022 Warner Media spinoff, which finally allowed them to make highly targeted telecom investments again, like acquiring Lumen's fiber business in early 2026.
Moving right along to Section 2, Financial Health and Capital. Let's peek inside their Q1 2026 balance sheet.
Let's talk about the sheer scale of this company. AT&T trades on the New York Stock Exchange under the ticker T, and they boast approximately 6.94 billion outstanding common shares. That is billion with a B. And get this, about 66% of that is held by institutional owners. We're talking large mutual funds and pensions. That massive backing provides some really significant stability to the stock. It's also worth noting that they've been actively utilizing a share repurchase program. They bought back over $2.2 billion of stock in just the first quarter of 2026 alone. That helps offset dilution and really enhances value for those billions of shares.
Now, balancing the books, we're looking at a staggering $421.1 billion in total assets, going up against $138.4 billion in total debt. Yes, that is a mountain of debt for sure, but it's deeply secured by incredibly valuable, long-lived infrastructure assets. Over $133 billion of those assets are property, plant, and equipment, and another $129 billion is tied up in spectrum licenses. Meanwhile, they're sitting on nearly $12 billion in cash and equivalents, so they definitely have the liquidity they need to keep this massive machine running smoothly. If we dig directly into their official Q1 2026 earnings release, revenues hit $31.5 billion, driven really strongly by advanced connectivity. That represents a 2.9% year-over-year increase from 2025. Now, 2.9% might sound kind of modest, but for a ship this massive, moving the needle forward consistently is exactly what investors want to see. Operating income, which is essentially the profit from their core business, actually shot up 15.7% to $6.6 billion. That proves their pivot toward profitable, advanced connectivity over legacy copper wires is absolutely paying off. And to maintain their tech edge without overextending themselves, they're relying heavily on strategic cloud and 5G partnerships rather than trying to build the whole shebang in-house. By integrating with Microsoft Azure and AWS for edge computing and using Ericsson for their radio access network, AT&T is smartly positioning itself as the physical conduit for the next generation of enterprise AI and cloud solutions. They're basically outsourcing the software layers to the actual experts, which is a brilliant move.
Which brings us to Section 3, Building the Network. Let's talk about their massive $250 billion commitment.
In just the first quarter of 2026 alone, they aggressively deployed capital. Most notably, they spent over $5.7 billion to acquire Lumen's fiber business. And on top of that targeted acquisition, they dropped another $4.87 billion in standard capital expenditures. This active investment is rapidly expanding their geographic reach, systematically replacing that old, legacy copper network with future-proof fiber. This bold commitment signals a hyper-focus on building the reliable infrastructure that's literally required for future innovations like AI and autonomous tech. AT&T recently announced they are dedicating more than $250 billion over the long term to build ubiquitous, high-speed networks. They are betting the entire company on one main thesis. The U.S. economy is going to demand exponentially more data, and whoever controls the most reliable, highest-capacity pipes will be the ultimate winner.
And the growth plan here is highly specific. They are scaling from 32 million fiber locations all the way up to a staggering 40 million by the end of 2026. This isn't just a vague promise, it's a hard target. With the addition of the Lumen assets and their own internal build-outs, AT&T is really cementing its position as the largest fiber internet provider in the nation, laying down a foundational layer that will serve them and us for decades to come.
Let's move to Section 4, the dividend story. We're looking at AT&T as a quote-unquote yield haven.
So if we look back to 2015, AT&T was paying out roughly $1.89 per year, eventually climbing over $2 by 2020 when they were known as a famed dividend aristocrat. But as the historical data shows, the company recalibrated down to a highly sustainable $1.11 annualized payout after the media spinoffs. When they spun off Warner Media, the company naturally became smaller, so a proportional dividend cut was just necessary and fiscally responsible. The big takeaway here is stability. Since 2023, they've maintained that $1.11 annual payout flawlessly, choosing to prioritize a healthy balance sheet over an artificially inflated yield.
Looking at 2026, this $2.2775 quarterly payment per share cements AT&T's status as a reliable income generator or yield haven, especially during volatile market periods. At a forward yield of around 4.2% and supported by an estimated $18 billion in free cash flow for 2026, which remember is the pure cash left over after all the bills and investments are paid, this payout is considered highly secure. It rewards long-term holders while leaving plenty of capital free for those massive network investments we were just talking about.
All right, Section 5, global and U.S. competitors. It's time to size up the telecom giants.
Domestically, AT&T remains locked in a really tight three-way battle with T-Mobile and Verizon. They're differentiating themselves by becoming the nation's absolute biggest fiber provider. While T-Mobile and Verizon are aggressively expanding their 5G and fixed wireless footprints, AT&T is currently sitting as the third largest wireless carrier. However, their unique edge is that massive physical fiber footprint. It doesn't just serve homes directly, it's the essential backhaul required to make those 5G wireless networks actually function at high speeds. Now on a global scale, when pitted against giants like Deutsche Telekom and Vodafone, AT&T's pure earning power proves it's still an absolute titan. They have guidance of nearly $48 billion in EBITDA for 2026, which is essentially their core operational profitability before any accounting tricks. Deutsche Telekom, which essentially owns the majority of T-Mobile US, does boast a higher brand value, but AT&T's fundamental operational earnings keep them fiercely competitive on the world stage.
And finally, Section 6, our final verdict on AT&T. Are they the essential utility?
Well, Wall Street currently views this new, leaner AT&T as a moderate buy. They recognize that by shedding all its media baggage, AT&T has essentially become the crucial backbone for our digital future. Analysts point to a consensus price target that implies roughly a 16% upside from early 2026 levels. The old conglomerate discount is completely gone. What's left is a highly focused company generating immense cash flow, returning it reliably to shareholders, and building the literal physical foundation of the digital economy. So I leave you with this question to ponder. As our world demands more connectivity than ever, is AT&T perfectly positioned to be the ultimate winner in the post-media era? I mean, as data consumption explodes, the physical pipes carrying that data are becoming just as vital to our daily lives as the water or electricity grids. Thanks so much for joining me to unpack the data in this explainer. Keep learning, keep analyzing, and I will catch you in the next one.